Hello everyone, my name is Vikas Shukla, and in this video I'm going to give an answer to a question that was asked in Quora or other places. Others have a question that should they buy the NIO stock or not, and the answer to the question is going to vary with time. And at present, the NIO stock in August first week is at I think close to $14, 13.9 or something, 13.86 or something. That's what it closed today. So to answer this question, I cannot answer we should buy it or not. I can answer the strategy that you should use if you are planning to enter into the NIO, because the stock may keep same. It may go up, go up, but it also can go down, and you nobody can predict. I cannot predict, you cannot predict, even the most of the insiders also cannot predict, because they also do not know what the future is going to be. What we could do instead is to prepare a strategy of what you are going to do if you buy today and what happens if it goes up or down. That's the strategy you can do, and you want to use the valuation of this stock based upon its earning and based upon its profit or profitability, and based upon how it's potentially going to perform in future. So at current, if you have seen my other videos about the NIO's valuation, and if you have seen my prediction of what's going to happen in August 11th, the Tuesday earning, you will have a very good idea that the NIO's current revenue is close to $500 million or $500 million, which means that in 4 years it's currently making $2 billion, and that's the current yearly earning of $2 billion, which puts it at a valuation of at least $6 billion. I'm saying at least because its production is going to increase in future and should keep increasing. It's in a very early stage, and the EV vehicles are going to keep ramping up in production. So over a period of next year or so, we expect that vehicle production to go or sale to double. It's increasing like 20% every month. They are introducing new vehicles, and that gives a good hope that its sales will double in a year of time, and therefore its valuation should also go up to at least $12 billion. Its current valuation stands at like $14 billion. So its price takes into account the fact that its production will be going to look like double in a year. What we do, it could do a little better because it can turn to profitability, and the profit margin should be significantly good because it's selling its cars at a very good premium, and the cost I am expecting in China is lower compared to the other places, manufacturing in the other places. So this stock price is valued, but it does not mean that it's valued fairly. It does not mean cannot go down. For example, 1 quarter of bad result, coronavirus coming back, or some competitors coming in, Tesla picking up its more market share. The Li Auto could prove to be a good competitor. It's a dual mode on electric as well as gasoline, could make it more attractive for the users. So many other things could derail its production and sales, and there is a chance that the sales could go down, the stock price could cool down a little bit from $13 to maybe even $8, maybe even $8 as well, or even as low as $6. But I do not expect it to go lower than 8 or maybe 6, because that's what its minimal valuation stands at. What you can do is you can buy a very small amount of NIO share for now and be prepared to buy more if, just a big if, its price goes down by like 20% or so. And what you can do is, now there is a good question, is that if you buy a low quantity, even if you have more money available, then if the price goes high, then you may not benefit from that increase in the share prices, which is actually true, and I don't think I have any answer to that. What you could do, probably what you could do is you could diversify into other similar promising stocks that has the potential to grow more, and that's what my answer is. I'm not give you an answer that you should buy, but what I can say is prepare for a strategy that will allow you to grab more share at lower price and hold some share at the current price. The one strategy, and I think there's a video about is and I think I've talked about that, is the put sell strategy that you can use for NIO stock. Basically, the NIO, you buy some share, and for the rest of that you can use a put sell strategy. For example, you can sell your put at 11. What it means is that if the stock goes down to 11, you will buy the share. If not, you will keep the premium, which means you will keep the cash, similar to what an insurance company does. I think that's another strategy that I'll point to. I hope this my talks have helped you a little bit to understand its valuation and the strategy. If you like it, and if you can subscribe it, I can keep talking more about NIO and other shares as well. Thanks for taking a look.